I have a real world scenario. This happened yesterday. I had a client come to me who wants to buy a $1.8 million home. The guy has a very successful business, does around $7 to $8 million a year in revenue. And when I looked at his tax returns, he had gone to another lender and that lender said, you don't qualify for the loan. And because his tax returns, if you look at 23 and 24 average, he made about $80,000 at the end. So all of that revenue, he ended up with about $80,000 of taxable income that lender was trying to give him approval for. So $80,000 doesn't qualify for a $1.8 million loan. But what their advice was, is you haven't filed your 2025 taxes yet, so go talk to your CPA and see what 25 is gonna look like. You hear that all the time. Like, okay, the cool thing about being a business owner is you have some flexibility in your tax deductions and your write-off. The downside of that is to get to more income. So for this home, he needs to make around $360,000 on taxes to go that direction. The problem with that is to show $360,000 of income, he's going to take a massive hit on taxes. He can, by law, write off the things that he's been writing off and stay within this 80K range. He has to show 360 with the other lender in Oregon, 10%, just call it 10% state tax for easy math. And then he would be in a 37% tax bracket. His tax liability is 47% on $360,000. That comes out to about $169,000 of tax. 2025 tax return files, he's writing a check, $170,000, just so he can qualify for this $1.8 million loan. That is the conventional old school way of thinking. And that's what most people will have to do if you don't have somebody in your corner who understands money, who understands entrepreneurship and business ownership. Same client came to us yesterday, said, you don't have to file your taxes. We can do this loan today. And this is how we structured it. Bank statements, $7.8 million in revenue. This person comes out with about $300K a month of income for our loan program. $300,000 a month. He could buy anything he wants as long as he can put the money down, technically. What's the catch, right? That's the question. For that loan, he's gonna pay a little bit higher interest rate, 6.625, no points. He's putting 20% down, 6.65, no points on this bank statement loan. He was getting quoted at 5.875. He's paying about $900 more to do this bank statement route, okay? That seems like a lot of money, and it is. I'm not saying it isn't, but the reality is, if we take the tax liability of $170,000 and we look at, I can buy this home today without having to take this hit, it's almost a 10-year break even. 10 years of paying this mortgage just for paying 1 year of tax liability, and that's how people get caught up in paying so much more than they should have to by not having somebody in their corner who understands how to work with entrepreneurs and business owners. This borrower is buying this home. He's in contract. After yesterday, they wrote an offer, got his pre-approval, ready to rock and roll. He's getting this home. He's gonna work with the CPA to ensure that they are doing all the right things and taking the correct and legal tax deductions that they can. But he's gonna minimize this entire tax liability and still get the home that he wants. If you want somebody who can think outside the box and understands how you run your business, because I'm a business owner too, you got to give us a shout.